Did you know that just by starting a new home business online, you have already made an income for that year? Come inside and I'll let you know why. Hello and welcome to this video, which I title, Your New Business Day 1. You have already made money. So that begs the question, why have you already made money on the first day of your new business venture? Well, let me explain that for you. A home business automatically is able to deduct as expenses the full cost of doing business. So this means that if you're working from your home, a share of your home space and home operating costs can be charged against the business when you file your annual tax return. The next point is that anything you use at home for your business, such as your computer, your internet connection, a share of your utility costs, etc., immediately becomes tax deductible on your standard personal tax return. So this means that you can deduct these expenses from your earned employee net income on your tax return, even if you have earned no revenue in your business as yet. You will now pay less taxes on even the salaried income you have earned at the end of the year. So expect a refund. Oh, and by the way, this additional refund can help you fund your initial business startup costs. So let's take a look in more detail at the mathematics of this through the next couple of slides. At an overview of an employee tax return, the math goes like this. You earn a salary, you deduct your personal exemptions, your personal deductions, and you come up with a taxable income. Now, just for sake of calculation, let's say the tax rate is 30%. You're now paying taxes to them for that $50,000 income of about $12,000. On the other hand, if you are self-employed, and here's the big key differentiator on this, you start out with that $50,000 income, you take off your personal exemptions, you take off your personal deductions, but then you also get to deduct your business expenses. Now your taxable income amount is much lower. If you're using the same effective tax rate of 30%, you're paying tax of only $7,500 instead of that $12,000 plus on the example before. Well, what kind of things can you now deduct that you couldn't as an employee? Well, you can deduct your share of auto expenses and gasoline, auto depreciation, rent or mortgage relating to having an office in your home. So that percentage of your space that you're using for your business is all deductible, as are the share of all related home utility costs, telephone, etc., internet costs, advertising costs, office expenses, business meals, uniforms, shares of auto and home insurance. All of these things are eligible deductions from your tax return in figuring out your taxable income. And that is a major, major difference between an employee who can deduct none of this and a self-employed individual who can deduct all of that. So final comments on the mathematics part of the equation. As an employee, the tax department gets more of what you earn than if you are self-employed. So they're making more money off you as an employee. The key tax differentiator is allowable business expenses. Example 1, a really clear way of differentiating is, let's say you're an employee and you drive to work. You get no deduction for that. You're basically eating the cost of your vehicle and the gas and everything else to get there. If you're a self-employed contractor driving to a project location, you can deduct the gasoline, the vehicle repairs, the license costs. You can depreciate the value of the vehicle you're in when you're filing the return. If you're out of town, you can depreciate all the hotel bills, etc., etc. So the tax department, by this structure, basically is making good money off the employee, but allowing the self-employed person, who are risking much more by not having a steady monthly paycheck, they are rewarding them to allow them to keep more of what they earn. Now, why do they do this? Employers create jobs for those that want to be employees. Self-employed people often become employers, hiring employees who the government can then make good returns on tax-wise. The tax department recognized self-employed have no job security, no pensions, no holiday pay, or other employee benefits. And so they're cutting them a break on that. And the tax department recognizes that self-employed must regularly be marketing their next engagement, working to get their next sale, their next project, etc. And so they make allowances for that. I hope you've liked this quick tip. Be sure to subscribe to my YouTube channel to get more of these tips as I publish them. Also, if you're interested in learning even more about ways to improve your online business success, start by taking one of my online business training courses for free through my free course link button found on this page. I hope to see you on the inside. Thank you for watching this video, and bye for now.